Well, it looks like it's going to be a solid end to the week for equities. The S&P future testing 6,900 to the upside once more. The Nasdaq 100 future up by over 1% overnight. The catalyst of this, of course, the strong mega cap tech earnings that we got after the close yesterday. Amazon delivering beats pretty much everywhere you look, whether that be on EPS, net sales, AWS revenue, etc., etc., etc. Bezos's behemoth delivering once again, and the stock up by well over 10% at one stage during aftermarket trade yesterday. And also Apple, a solid slate of figures from Tim Cook and co, beating on both top and bottom line. And the market also shrugging off a rather chunky miss on China revenue, with the company largely attributing that to a delay in launching the iPhone Air in the world's second largest economy, which potentially poses an upside risk to consensus expectations in terms of greater China revenue in the next quarter. Of course, the equity rally comes as market participants also continue to move past the fallout from the FOMC on Wednesday evening. We did have a bit of a wobble in the equity space yesterday, early during the session anyway, on the back of Chair Powell's comments at that press conference, where he was noting that a cut in December is far from being a foregone conclusion. As I said at the time, my view is that is very much Powell seeking to build in a greater degree of optionality into the forward rate path, as opposed to just allowing markets to price such a move as a certainty for the next 7 weeks. That is particularly true considering the fact that we don't know when we're next going to be getting official data from the states, and also considering that we now have a three-way split on the FOMC, with Schmid preferring to hold rates steady and Moran, of course, dissenting for a larger 50 basis point move. But fundamentally, as we look ahead, we're now through the bulk of those mega cap earnings. Of course, we have Nvidia reporting towards the middle of next month, but we have come through what looks to be a very, very robust mega cap earnings season. The underlying US economy is still resilient. The Fed funds rate is on its way back to neutral. The balance sheet is bottoming out at neutral. Next week should see the resumption of corporate buybacks now that the bulk of those earnings reports are out of the way. And we also have the idea of fear of missing out and fear of materially underperforming flows coming in from fund managers as we move in to year end as well. Frankly, the bull case remains a very, very solid one, and in many ways it's perhaps as strong a bull case as you could possibly wish for as we move into first Thanksgiving and then the end of the year.